So I would like to start off with some of the current events. As you must have heard, there's been some major events taking place over the past weeks and months in China's property market. The future of this sector has become one of the most closely watched issues by the Chinese themselves and by Western media. So my question is, what's your assessment of China's property market at this moment?
I think the property market certainly has quite a bit of corrections to go. There has been too much leverage, too much overextension in the property market over the course of the last 2 decades. It's brought a lot of wealth to people, and it also has brought a lot of gearing, which is very and can cause problems. So I think the property market is certainly on the top priority for the Chinese government in being able to address the economic issues of the country.
What role do you see this sector play in the future of the Chinese economy?
I think it's now entered a different phase in the properties market. There weren't enough housing before, and urbanization brought about massive amount of growth in the housing market in the cities, including the second and third tier cities, or even fourth tier cities. So there's been quite a bit of building. And I think it will continue to play a significant role, but a different role. For local governments, selling land to developers will no longer be a major source of income for them as it has been. There would have to be other arrangements to seek income for the local government. That's inevitable because there just won't be the same type of demand for housing in the urbanization process that had existed in the last 2 decades. It will still play an important role, but the role will be different. It used to be playing the role of generating income for local governments, providing adequate housing, if not substantial housing, for the population who are moving into the cities. But all of those roles will have to change, and it would play a different role. It will be housing for living in, not for speculation, and there won't be the amount of heavy leverage that had existed before.
Let's move on to another aspect of the Chinese economy. So there's been some reports about foreign capitals pulling out of China's A-share stock market. Some people are taking that as a sign that the Chinese economy is weakening. You said in an earlier interview with us that this kind of reporting is biased and that China's situation has to be talked together with the situations of the whole world. So where would you rank the Chinese economy in the world at this moment?
Okay, there are two things that's significant with the Chinese economy. It is basically the most sophisticated supply chain for manufacturing in the world today, probably the most sophisticated in human history. So it can produce things more efficiently and cheaper than anybody else and anywhere else. So the Chinese economy is significant in that it is sophisticated, elaborate, in being comprehensive, in covering all industrial sectors, and it is really, really efficient. So that's one role it plays. Secondly, for the developed countries, there's been deindustrialization or moving away from manufacturing. In fact, in the US now, nearly 80%, well over 70% of its economy, GDP, is based on the service sector. Its manufacturing side is really declined so significantly that it is, manufacturing-wise, it is much lower than China. China, in terms of manufacturing value, is the combined Japan, Germany, and United States. It's even more than the three of those combined. So the Chinese economy is significant in that it produces efficiently and it is a manufacturing economy. Now, the other part here is that it's a major trading country. It is the number one trading partner of over 120 countries. So it is supplying goods and services to countries which don't have them and need them. So the role that China plays is very, very significant on a global basis. And I think this will continue to be so because China is continuing to advance its technology in manufacturing. In fact, I was given a figure, I don't remember the exact numbers. There were more robotics in manufacturing installed in China last year than the rest of the world combined. So it will continue to be productive and efficiently productive.
Last question about the Chinese economy. I've seen some reports recently debating whether China can meet its GDP target this year, which is around 5%. They are saying that because there have been some major events taken place and some of the data came out of China might not look so good in recent months, the reports are saying that, well, China might miss this year's GDP target. What's your take on that? And especially after we've seen the huge traveling and spending over the National Day holiday, do you think that we can meet this target?
If you're taking it into a global context, there's been less exports going in the United States. And there are several reasons for this. Number one is inflation numbers in the West has been very, very significant. So consumption is down because people have less real value to spend on. So there's been less exports. The second part is one has to take into account the various duties that have been imposed by the U.S. administration in the trade war against China, which of course hurts its consumers and its companies, but it also reduces the amount of exports that comes out of China because of these heavy duties. What it does is that it moves some of the supply chain or pieces of the supply chain to ASEAN countries, into the neighboring countries, ASEAN countries and Mexico. So trade actually between China and ASEAN has become number one among Chinese trading partners. It used to be the US, then it was the EU, and now it's ASEAN countries. So what we see is ASEAN countries have actually become a very significant part of the Chinese supply chain, which is positive for the Chinese perspective because it's more regional integration, which is enhances efficiency and good for good neighborly relations. I think in terms of whether or not China will meet its target, numbers are numbers. The latest number out of Germany is that they expect 0.6% negative growth this year. So if Europe is in a significant downturn, China, of course, will be hurt as well. And the US side is still continuing inflation, threats of further increased interest rates, and so on and so forth, does not bode well for U.S. consumers. But in terms of capital leaving China, I think we should look at some numbers. Germany's direct foreign direct investment into China in the first half of this year almost hit all-time high, over 10 billion euros. So there has been some moving out from the U.S. side, especially since the U.S. started investigating investments by U.S. financial entities and institutions in China. But this, I'm convinced, will be more than replaced by European investment as well as investments from the Middle East. There's been really significant inflows of investment from the Middle East. The top ones, of course, are Saudi, PIF, Abu Dhabi, well, actually UAE overall, and Qatar, and also Kuwait. Kuwait has been quietly investing in China as well. So I think this is significant, the trend of the Middle Eastern countries investing in China.